Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, September 8th, 2016. I'm looking at two pharmaceutical biotech names here that are due for a bounce and look to be putting in a nice little bottom here. Number one is Mylan. All right, Mylan obviously has had the whole EpiPen fiasco, but that stock looks to be putting in a little bit of a bottom here. You can see it's sharply oversold, very far away from the 20 moving average. I'm looking for a bounce from this range all the way up to about the 43 to 43 and a half. See all this consolidation here before the latest fall? That's what you're looking for a retrace into. So anywhere between 43 and 43 and a half is an easy move here to the upside on a swing trade basis. Again, looks like a very good opportunity here. The stock, again, sharply oversold. And listen, I mean, they're definitely getting bad press, but look at the chart. It's been bottoming here for quite a while in this range. So you should get some sort of bounce. Now, I'm not going to tell you it's not going to go lower later on. In 2 months from now, I actually do think it will go lower because this is a longer term bearish pattern. But overall, in the short term, it's oversold, due for a bounce back to about 43 and change. Then you want to get out and look for further downside. And again, just simply look. I mean, you got a nice little pivot low right in here. You got pivot low right here. I mean, there's so much support in this range that it's a very good risk-reward trade, at least for a very short-term bounce. All right, so again, we're talking about a bounce just back to 43 right here. Easy swing trade. Another trade I like actually is a longer-term trade is Bristol Myers Squibb. All right, first of all, look at this tail right here. That's a bottoming signal right there on good volume. That's kind of a capitulation type volume day. Okay, so that's number one. Second of all, you have to see that the chart is now consolidating sideways off of this little reversal tail, which is bullish. The next factor that I'm looking at is, not only is it oversold dramatically, but this isn't a small, mid, or even large cap. This is an epically large cap company that's down from $76 here to basically $55 to $57. I mean, we're talking about a $20 fall, huge percentage drop on a pharmaceutical play here. And this is like a Pfizer. It's not going away. Yeah, sure, it had bad news, but ultimately it's going to slowly grind back up. And the best kicker of all, it pays a 2% dividend. So, this isn't, for me, BMY is different than Mylan. Mylan's a very short-term trade. You want to be in, you want to be out in a few weeks at a gain of $2, $3, something like that from current levels. Bristol Myers is much more of a stock that I would be okay with tucking away in a portfolio for a longer period of time, getting the 2% yearly dividend, and ultimately at these levels, eventually I think it grinds its way up here. So, I mean, you got potentially, 30 to 40% upside over the course of a year or two, plus a 2% dividend paid yearly as well. I mean, that is an awesome risk-reward scenario for me as I look at this stock. So I love Bristol Myers as a longer term. Plus, look at this support right down here. I mean, you got these pivot low, and then little higher lows here. This is a really good setup. In terms of a bounce, what I really like is a move back here. Check this out, guys. I love this technical analysis mumbo jumbo, right? Low pivot to low pivot gives you the exact high of the gap down. That's your target. So on Bristol Myers, if you're looking at a short, now listen, eventually I think it's going back here. But in the short term, I think it's going to break up and head back to about $65 right here. The two moving averages are coming into that level as well. This is one of those trade setups that's a beauty. And again, the way I look at it is this. For those of you that are investors, a little longer term portfolios, maybe IRAs or 401ks, you look at it and say to yourself, okay, well, let's say the stock goes down a couple more percent on me. Let's say it goes down 5% or so in the short term before it starts to bounce. Well, I'm still getting a 2% dividend. It's a very low-risk play like that. So again, eventually we all know the stock will head higher. It's a good, solid stock, good, solid company, and you're getting that 2%. So that's awesome. So again, folks, if you're looking at a shorter-term trade, look for a bounce back to about 64, 65. Longer term, we're looking at a move much higher plus that 2% dividend. All right, guys, come join InTheMoneyStocks.com. Come join, take the 7-day free trial. Again, get trades like this, get analysis like this. This is what it's all about. Come join us. It's a 7-day free trial. You can't go wrong. And again, this is where we profit. Today alone, 2 new profits taken in the research center. Last week, a good 15 net percent from a couple trades as well. We're short Apple right now, almost $5 in the money. This is where it's at InTheMoneyStocks.com. And let's be honest, it's been slow. The summer's been slow, but again, we're still churning out these profits. So come join us at InTheMoneyStocks.com.